Hello everyone, welcome back to another episode of the VMC Inc. Financial News Network. I'm Victor Campos. It's September 30th, 2016, which means it's the end of the third quarter. Let's take a look at our various portfolios to see how well we've been doing. We'll first take a look at our tech stocks portfolio. Remember that we've bought one share out of these 10 tech stocks at the beginning of the year, 2016. If I organize my results into percentage change since purchase, starting at the bottom of the barrel, there's only 3 companies that are in the red. That's GoPro, we've lost about 10.78% value. Netflix, we've lost 10.36% value. Square hasn't been able to get back on track. They had an IPO at the beginning or at the end of 2015, and that's a loss of 4.11%. It's just 50 cents, but 4%. Then into the positive territory, well, it looks like Twitter is starting to rebound with recent rumors of an acquisition. I don't know if I really hedge all my bets on that, however. Microsoft has been a good result of 5% return. Apple, 7% after their volatility at the end of 2015 and beginning of 2016. It's over $100 a share. It's giving us a return of 7%. Angie's List was a very affordable stock to invest in last year, and so far it's resulted in 8.54% return. Activision is another good tech company that's given us some good results, 17.76% return. And then a huge jump, Etsy has come up to 73.30% return from the beginning of the year. Now that's not the rosiest picture, because if you had purchased Etsy shares in 2015, that's actually still a big loss. But this is counting if you had bought shares in these companies at the beginning of 2016. If you did, Etsy is amazing. And at the very top of the heap is Nintendo with an astonishing 91.19% return. If you had bought shares in Nintendo at the beginning of the year, you had paid $17.25, and now it's worth $32.98. So in total, we've been getting a 16.63 return of our investment in the tech stocks portfolio, which has been $26.25. Looking back at the end of the first quarter, 2016, this same portfolio had a loss of 4.33%. Lots of red at that point. The beginning of the year was very volatile. China was weighing down on markets. Then, at the end of the second quarter, we had a pretty bad loss of 11.94%. This one was a result of Brexit. And so at this point, at the end of the third quarter, that seems like a pretty good turnaround, 6.63% return. Now, just a couple of days before recording this video, there was some global financial turmoil from Deutsche Bank, which perhaps has been smoothed out, and we end the third quarter of 2016, our tech stocks portfolio, with a gain. Looking at our 401k portfolio, we've got 3 funds. We've got a bond fund, we've got a domestic stock fund, and we've got an international developed markets fund. At the end of the third quarter 2016, we've got lots of good results. We've got a 1.18% increase of return from the developed markets fund, 1.18%, which is 14 cents on a very affordable $11.97 price tag. Then we've got a 4.32% return on value. That's 46 cents on our $11.10 purchase price. And even better, we've got a 5.85%, which is $2.97 return on our domestic total stock market fund. That was a purchase price of $53.77 per share. So comparing throughout the previous quarters, at the end of the first quarter, we had a gain of 0.44% from this same portfolio. At the end of the second quarter, we had a gain of 0.64%, and as it stands at the end of the third quarter, an even better return of 4.87%. Lastly, our ETFs portfolio. So we have 1 bond fund and 3 stock funds. We have 1 share each. Changing our columns into percentage since purchase gives us a 4.20% return on our bond fund, $3.39, with a purchase price of $84.14 per share. So we've got a 7.36% return on our investment, $4.17 on our total world ETF, that's $60.82 per share. We've got an 8.36% return, which is $8.59 on our total stock market ETF at $111.33 per share. And then we've got 9.39%, which is $6.19 on our high dividend yield ETF, $72.14 per share. In total, that's 7.30% return year to date 2016 on this portfolio, which is $22.34. Comparing the end of the first quarter, we had a 2.70% increase in our investment from the same ETFs. The following second quarter of the year, we had a 4.87% increase in this portfolio, and now at the end of the third quarter, a 7.30% increase. So to recap, our tech stocks are doing pretty well overall, 6.63% return. Our 401k portfolio is a 4.87% return, and their ETFs are a 7.30% return. After weathering the storm of the beginning of the year, perhaps this ship has been righted. We'll see how things go when we recap at the end of 2016. This has been Victor Campos for the VMC Inc. Financial News Network. See you next time.